Money. If you like this video, please subscribe to the channel and share it with somebody. Guys, housing prices hit another high. And you might be sitting there thinking to yourself, geez, oh, Pete, but interest rates have more than doubled in a year. Yes, inflation is helping out though, because if costs keep going up, it's going to drive new home prices, everyday prices. So that's how you can keep this housing boom going. Now, with that said, eventually something's got to give. Supply and demand. We learned this in Econ 101. If supply shifts and demand stays the same, you still see up and down prices for assets. Same thing with demand shifting, with supply staying the same. These things all work together. And in housing and anything in the economy, there is so much working together, it's hard to predict. Now, I will say this. The biggest slowdowns will happen in the hottest markets. So the San Franciscos, the Las Vegas, the LA, the New York Cities, Miamis, those ones will have the biggest problems. Let me give you an anecdote. Somebody recently asked me for help in a real estate deal. They bought a home in 2006 in Miami for $375,000. In 2006 in Miami, you would be hard-pressed to find anybody who would have thought that housing prices were going to continue going to the moon. Guess what happened? We are 16 years later, and they're now selling the house for $400,000. Now, after another big housing boom, are they just getting $400,000 for it? It fell as low as $200,000 in value for that house. Did they ever think that was going to happen? No. Did anybody think in 2006 that was going to happen? Michael Burry, he thought that. That is the problem, guys. But with housing, the great news is if you plan on buying a house to stay in for 20, 30, 40 years, you'll probably do okay just by putting 20% down, paying down your debt, and not worrying about the house value. Remember, your house has other value besides just the dollars involved. And you can still make money in housing even if your house stays the same value for 20 or 30 years. As long as you pay down your debt and you just take care of things, your 20% down payment will transfer into 100% equity over a 20 or 30 year period. That is getting 5 times your money in 20 or 30 years. Now, over long periods of time, you should also have your home prices going up with about inflation or income values, okay? But if you're living in one of the hottest markets in the country, please pay attention to where renting is cheaper than buying by a significant number. If you have time to wait, and you're like, you know what? I can wait this out a little bit. It might be smart to do so. Is that for sure? I don't know. But what I do know is right now across the country, we see interest rates almost double. We see inflation kicking up and potentially a recession either in now or in the future, depending on who you ask. Is this really time to be paying stupid prices for houses? I don't know. It just depends on your situation. I can't possibly give you the right answer. Housing is an asset that vast majority, I think it's like 69 or 65% of people own a home at any given time. That's a lot of people. So this is probably your biggest investment you'll ever make. And sometimes you actually do need a house. But remember that you can still do okay if you plan on staying there for a long time and put reasonable amounts of debt on there. Don't go out there putting a 3% down or no money down, things like that. Because if all of a sudden you have an ARM, which is an adjustable rate mortgage, and housing prices tank, which I don't think is going to happen, because I do think inflation is going to help, but it all depends on where the economy, and if there's a recession that happens, what happens with it? These things are all working together at a lot of times. I don't think we have 06 and 07 again, because the lending standards back then were insanely terrible. Literally, you could say, I make $200,000 a year, and they would give you a mortgage without asking for verification. We don't have that today. Even when I get a mortgage now, I have to jump through hoops. And I'm like, are you serious? I have to do all this for a stupid mortgage that I can easily afford? That's a good thing. It's okay to have restrictions. It's better for the asset values. But just don't forget, inflation helps real estate prices. So if you currently own a home and you have a great mortgage, you're sitting pretty. My now fiance, she got very lucky. We bought a house 2 or 3 years ago. She bought it from me last year, and she got 2.625% interest on a 30-year mortgage locked in. We are never getting rid of that mortgage. We're currently buying a new house to live in together. And guess what? We're going to keep her house as a rental for the rest of her life because it's a great mortgage rate. We can rent her house out and probably get over double what our mortgage payment with tax insurance and HOA fees, over double as a separate investment for her. and we'll let the house, we'll pay down the debt, and maybe 30 years from now, it's worth double what she paid me for it. Great, awesome. But housing is something that's big in the news now. You still see a lot of people out there struggling to get homes, putting multiple bids in. And also, the realtor next door who says, I am the reason why your house is selling well, it's not. It's only because of the market. Just like if the market were to crash, they'd blame the market. Don't give them too much credit about that. That's a big pet peeve of mine. But housing prices are up 20% year over year. It's booming out there. It's exciting. It's okay to have calmer markets, guys. And housing tends to be a very stable number over time. So just be patient, be ready. I expect there to be a slowdown coming. I mean, even new home sales are down 14% month over month. That's a lot. That's a lot. And that tells me that it's going to have a little slowdown. But for somebody to deny that the interest rates are not going to cause issues, I still think it's going to cause issues. But the question is how it all plays out together with the economy, everything like that. If we see a recession and increased interest rates and all these things, there will definitely be a slowdown in home sales. But when you had 50 offers on a home before, even if you go down to 10 offers on a home, it's still more offers than the person needs. So just remember that. Thank you very much. If you like this video, please click the link above. It's another housing video that we did that went more in depth in the housing market and how it all works. Thank you very much. Don't forget to subscribe.